Welcome back, everybody, to the Roundtable. First of all, I hope you had a great Christmas and a great New Year's. Luke here again today. Same old voice, same me. Survived Christmas, New Year's, and COVID somehow. And we've got Ghost back. Welcome back, Ghost. Fresh into the new year.
Y'all. Yeah, thank you for the welcome, as usual. I hope everyone had an amazing holiday and saw your family. If you didn't see your family, at least shared great times with those that you care about. And for us, we're just hopping back on the horse and getting right back on it. So it looks like, Luke, we have the Bitcoin US dollar chart on the 3-day.
Yeah.
Candle,
so we like to start off these little market overviews or little updates on what we think's interesting going on in crypto at the moment. Always good to start it off with a bit of overall sentiment in the market. Obviously, the last few weeks, about the last 7 or 8 weeks have just been absolute pain for Bitcoin after a failed all-time high break and SFP. So that's swing failure pattern. And it's just been down ever since. And now this is also on the back of fears that, the market's going risk off. I was about to say next year, but that's this year, the Fed talking about hiking rates and easing off and tapering and a lot of that stuff. And it's an important factor that it seems to me like a lot of institutional funds and traditional players are paying attention to that data because it, when we get CPI news or, the Fed talks, you can see the market reaction now. Bitcoin's kind of grown up a bit and it's starting to get affected by some of these, greater macroeconomic, figure points and stuff like that. And people are definitely trading off of it. But yeah, to summarize,
for sure.
We've had a massive...
Just to build on what Luke said as well, I want to briefly say a lot of what the central bank does with guidance, market guidance, of which the interest rate that they set is actually so. It is just guidance. And a lot of it is mainly they're trying to coordinate the market about the way they should pursue macroeconomic trends. And so we're going to see again the limits of the tool set that the central banks have of their respective economies, and it's going to be very interesting next few weeks to months to see how the dollar responds, how assets that are viewed as like hedges against inflation of the dollar respond, and commodities in general. But go ahead, Luke, take it away.
Yeah, so basically to summarize, Bitcoin's been through a bit of a pain stage, and you've got a lot of the people coming out now, a lot of diehard 4-year cycle fans, a lot of hardening cycle fans, everyone's trying to figure out, what's going on with this cycle. Are we still in a bear market? Are we still in a bull market? Are we in a bear market? It's hard for me to, look back on previous cycles and compare this one because this is very new price action, in my opinion. I don't think we've ever had a bull market phase that's had, such a pronounced chop, essentially for a year, and still only 2 or 3 times off the base of the last all-time high. You've got people calling, for 80% declines or whatever from like the last market, and it's entirely possible. But at the same time, the market didn't run Bitcoin didn't run as hot. Even from the COVID lows, you'd only really put in, what's that? Well, that's still pretty hot, eh? 15, 16x, 17x. But it really is a tough market. And I feel like that's kind of showing in the chart a bit is you see these sharp liquidation moves and then no one really knows where it's going. And then it takes off so quickly from the bottom that everyone chases it up again, over leveraged again, and you get the same kind of flush. It's like people seem to be very paper handy with their positions at the moment, not knowing whether to get in, get out, risk on, risk off. On a bit of a bigger picture scale, we've got the crypto total market cap chart. Obviously, we've had some insane growth this bull market from, what is that? It's about 6x or something like that. 5-6x in total growth, and it's pulled down a fair bit from topping right at 3 trillion there back down to 2 trillion. But again, no one really knows what the market's got in store. But I thought of interesting before we move on to a few other metrics we want to look at and a few other topics, Ghost, that again we've mentioned in previous episodes that the market seems to be trading a lot a lot separately. And what I mean by that is, with on-chain dexes and more US dollar liquidity as opposed to Bitcoin pairings, we're seeing a lot of decorrelation in some assets pumping or trading inverse to Bitcoin. Some examples of that have been Dual, Near, Luna. A lot of alts have made fresh highs or 10x gains in the last year, and Bitcoin's really gone nowhere. So I'm not sure. In my opinion, I actually prefer that. I like a market that's a little bit less correlated because it also means you can pick value picks and not be stressed about external factors. But enough about the market. I hope you guys are okay out there. If you are trading, be safe with leverage, and just, take things slow if you don't know where things are going, would be my advice.
Luke, I would like to point out with regard to the overall market cycle would be that if you look at the actual, so people that may want to claim that we're only going down from here, if you look at how tight the time frame was, I guess you could go that second chart, Luke.
This one.
And zoom, maybe go to the weekly again. Yeah, so notice how quickly back in 2018, how everything within a span of a few weeks reached the top. Like, you had like a 30% drop, then reached all-time highs again, and then subsequently started the massive capitulation or the grinding of bones, and it was raining blood. But so, and this happened within a span of like a month. But what we're seeing now, as Luke was saying, is like a massive chop, near all-time highs, 4 months now. I mean, it's close to close to a year into like this massive swings from all-time highs and to 50%, almost 50% losses. And this kind of movement it's not the punctuated euphoric peak that we've seen in previous market cycles. And I think those that are entering in, like let's say 2019, 2020, post Corona, this is something that this is not the end, and we may be seeing the entrance into this super cycle or the mellowing out of both the tops and the bottoms. You don't have extreme losses, but you also don't have as extreme gains in the higher quality picks, so to speak. So, but yeah, Luke was about to I stopped him, but he's about to go hop into an interesting metric. This is hash rate. For those that don't know, hash rate is basically the measure of security of the Bitcoin network. And if we can look at all time, Luke, on the chart, you can see that it's gone from nothing to something very substantial, and these are in the millions of terahashes for Bitcoin. And if we can go back to the year perspective, we can see that from, I think this is May or June, we had 184 million terahashes. And when China, right, banned Bitcoin, which, for a lot of people, Luke and I were talking about this before, and he just mentioned how everyone's mentioning how Bitcoin is all centralized. China has a majority of hash rate mining. And we really proved these claims to the test whenever China banned Bitcoin mining from the shores. We went all the way down to 58 million terahashes, which is the largest percentage loss of hash rate in Bitcoin's entire history. And yet, if you look at the Bitcoin chart during that time, we didn't actually see any major capitulation alongside this that was proportional to the amount of hash rate that was lost. And so despite this as well, it's really weird. So Bitcoin's price and the hash rate, which protects and drives the demand for Bitcoin by miners, these kind of have this push-pull factor towards each other. If hash rate goes down massively, the difficulty of the system adjusts and makes it so that people that are in the system can mine Bitcoin easier, and therefore it's cheap for them to mine Bitcoin, therefore supporting the security of the assets that are secured on chain. But yet we see over time as well that honestly hash rate leads price, and we're reaching near all-time highs of hash rate with the majority of those Chinese miners still out of commission. So we may have something like close to 80 million terahashes of power just waiting on the sidelines to just be turned on for Bitcoin when the right circumstance arises. And so we're at this weird standstill where institutions are sitting on the sideline because they're not yet certain about what Bitcoin is. And as well miners as well, due to like Chinese interjections into the economy, can't deploy as much hash rate as they'd like, um, due to those circumstances. And so I would say for a lot of institutions that are more risk tolerant, this is a great opportunity for them to accumulate large amounts of Bitcoin, let alone for retail investors that are looking to find, again, their hedge against inflation, which Bitcoin might be. So what do you think about that, Luke? Do you have any thoughts?
Yeah, for me, it's more so the way the market moves on from narratives pretty quick. I think it's a pretty interesting, a very interesting point to really reflect on, where we kind of spoke about the Bitcoin mining ban 6 months ago or so, when it was kind of fresh in the minds. And back then, it was like, it was the narrative, like people were really stressing about it, worried about it. And, that was not even half a year ago. And now no one is even talking about really this hash rate migration that we've seen, because personally, I'm actually shocked at how quickly it bounced back. Um, it's pretty crazy to me that, Chinese miners made up, it was the majority of, mining by region for Bitcoin. And then, quite literally overnight or over the course of, 3 to 6 months of turndown, that went from being the majority to a minority, and the hash rate is completely, has just completely recovered. And I just think it's very interesting to me that markets seem to forget narratives very quickly. And that's something you should probably think about.
It is incredible, and just to back up Luke's point, like when you see parabolic advances crash more than 50%, like 90+% of the time, it doesn't recover like this. There's something strange happening here, and it's not just some euphoric expression of interest like tulips. This is like real, fundamental, consequential economic interest in a network that produces and built like so many different types of utilities just from the proof of work cycle and the ability to have a scarce asset that no one can censor. It's pretty incredible.
Yeah, I guess that kind of leads into what we were going to talk about, Jack Mollers and Mallers, I don't know how you say that, and what he's doing in Argentina. But correct me if I'm wrong, he's the guy who's kind of been implementing a lot of the tech side stuff. Is it Strike? It is Strike, isn't it?
Yeah.
Yeah, Strike. So that's
Lightning Network.
So it's it's not back, it's a payment system slash user interface for kind of like retail payments for Bitcoin. A lot of people know that Bitcoin's not cheap to send small amounts, and I think Strike working with Lightning has kind of made this a bit of a reality in El Salvador. Whether that's been a total success there, it's definitely a good start in my opinion. People getting different cultures and different people from across the world familiar with the interface. But the reason we're talking about it is he's going to try and do the same thing in Argentina, and I think it's pretty cool because if you read about a lot of like the early history on Bitcoin, Argentina was actually like a kind of a big part of it. Obviously, it's had a history of defaults and hyperinflation, and currency controls and stuff like that. And the people there, are really dying for something like this. So I thought it was just a pretty cool. Anything you want to add there, Ghost?
Yeah, go scroll down a bit until we reach. So there's a lot of fascinating facts in this tweet thread, but click on that chart if you don't mind. So right now, in Argentina, you can only use something like $200 per day. Notice it's denominated in dollars and not Argentine pesos. With regard to like remittances, like spending from your bank, et cetera, et cetera. And we can see like from beginning of 2019, there was like there's this huge divergence from the official exchange rate between the peso, the Argentine peso, and the U.S. dollar, and the actual effective exchange rate, where you can like the blue chip swap rate, so to speak. And like so Fernandez wins primary. She's a socialist. then it immediately after, so coincidentally, um, Argentina starts defaulting on loans. And they've had histories of this as well, but it really started hitting a fever pitch after 2019. And they had to request like loans from the IMF, just all this help that they could possibly get. Of which, by the way, El Salvador was in a very similar situation that the IMF actually rejected their request, and so that was in part why they turned to Bitcoin institutionally, and they're already seeing the benefits of such. By the way, both infrastructurally via all this newfound investment, and also just the ability for users to benefit off the advancement of the technology and the advancement of price, therefore. And so yeah, Jack is basically looking at this and saying, we want to extend this sort of utility towards Argentine users. And we can see as well that the divergence of the demand for dollars in this chart is so apparent. And so you can basically think that the dollar in Argentina is being like it's not hyperinflating, it's almost deflationary actually. So the dollar itself is like in the Argentine like economic sphere is very powerful. It can buy a whole lot for Argentinians. And so if Argentinians want to like if basically if Jack can introduce Bitcoin through his Lightning Network full stack, the amount of influx of new capital into Bitcoin for Argentinians, the demand is right there. We can see this in the chart. The huge, like 100% divergence between the official exchange rate and the effective exchange rate, and it's only going higher. So honestly, seeing all this activity in South America around Bitcoin and around cryptocurrency is incredibly promising. And it just like how like the internet was first adopted at the edges, and use cases, were extreme use cases that then became the center of economies that were more heavily developed. We're going to see the same thing happen here. So I just personally, I'm incredibly excited to see how this rolls out.
Yeah, so I mean, touching on that, we just kind of had like a headliner, kind of just backing up what we were saying about Argentinian defaults. Basically, guys, like it's hard for us to kind of understand how bad an inflationary, like a proper hyperinflationary cycle in a country would be, for the people living there. It's literally everything. Like your day to day, you go to work, you come home, and your dollars, it's worth less and less. Like it would just be an absolute nightmare. So I'm really happy to see that, the guys at Strike are kind of trying to push that frontier a little bit there.
My grandparents lived through that actually. In their country. They had the worst hyperinflation of recorded history, even worse than Venezuela.
Wow.
And the only thing that saved them was the fact that they had an asset on hand, it was silver coins that they could trade for fiat, and they would on the daily basis like exchange like these coins for food, and just use it immediately. Like you couldn't hold the paper; it would evaporate in your hands basically. Mm-hmm. Like you'd use it that day. And so again, they were so much better off than people that had no hard assets to depend on, and that were literally just being like their savings were just being like eaten away at. It's so Bitcoin being that for someone in Argentina and El Salvador, Venezuela, God knows where, is an absolute blessing for those that can get hands on it.
That kind of takes us on to our next topic, and that's good old powwow from the Fed. And obviously there's been a lot of talk about CBDCs, crypto reports that they're looking at doing. I think one of the key things we wanted to touch on coming out of this was that he said private coins could compete with the Fed digital dollar. And now...
And this is Bloomberg projecting. What he actually means is coexist.
Yeah.
Yeah, see, exactly.
Yeah.
Is there anything that could preclude a well-regulated, privately issued stablecoin from coexisting with a potential Fed digital dollar? And Powell said, no, not at all. And I wonder whether or not this is the case. And the reason why I say this is because history has shown that when governments get into new financial fields, such as gold certificates back in the 1500s, and gold certificates being traded for the likes of like um, Dutch East Indies Company equity. There was a huge demand for it. And the Bank of Amsterdam saw that, started issuing their own certificates, and then took over the entire market. So they established the fact that they could do it, and then they started making laws about taking over the responsibility and mandating such over time. So I think this is just the way that the government is getting an appetite for what crypto dollars are, and then once they're fully in place with their utilities, they'll make a substantial move to regulate everything that is a dollar, so to speak. So it's long short term very good because it allows participants to uh, get cozy with the fact that the Fed is going to be rubbing elbows with them, but ultimately it will be something that they will have to adjust to because the military might that backs the edicts of the Federal Reserve, the United States government, is ready and willing to support the dollar and but therefore the United States government's ownership of the dollar as a monetary instrument.
Hmm.
So
Cool. So I guess we'll have to just see how it plays out. But for a lot of us, a lot of you guys watching, you're probably or likely quant fans, as are Ghost and I. And this kind of ties into kind of what Gilbert's kind of been talking about pretty much for a long time. Kind of, he was definitely ahead of the curve on a lot of this stuff. He's been talking about, private, well, not private, well, are they private? Well, private stable coins, like the Barclays Bank coin, what were the other one?
Citibank
Citibank, yeah. Citibank's another one he always
and
references.
LAC chain.
Yeah, exactly. Like there's a lot of different private coin initiatives and stable coins out there. So it's definitely good to see some of this sentiment coming from the big ponchos, powwow as we call them. But yeah, anything you want to add on this topic, Ghost, before we move on?
Bro, let's keep going.
All right. You're taking the lead on Moxie?
Yeah, absolutely. Okay, so this is just another interesting, I think, event that happened. Moxie Marlin Spike, he's the founder of Signal App, a true coding CEO. He had a really interesting experiment he did with NFTs in what is now termed as Web3, in that he made an NFT that actually was malleable as to the output on different interfaces. Like this is how the NFT looked in OpenSea. Then the left, the middle one was on Rarible, and then the right was how it looked in your wallet, which was a poop emoji. And he was just showing how as it stands currently how malleable NFTs can be due to the fact that the what they're corresponding to, so the asset, how it corresponds to like the JPEG or the GIF or whatever media, is not tightly coupled because Ethereum is exceedingly scarce in terms of block resources. And putting a GIF on Ethereum, good God, how much would that cost? It might be like thousands of dollars, if not more. So they usually just have like pointers to like easily corruptible servers that provide the JPEG that the like the poop emoji. And so this kind of malleability, like which all these NFT makers have been basically assuming in good faith, like, hey, don't change your NFT, like, and it might have like, I don't know. Oh, for those that don't know, OpenSea is like the most widely used NFT marketplace, and I guess they have a terms of service that if you change your NFT, then you're a bad actor, and so they removed the NFT from OpenSea. And what Moxie found was that this sort of NFT actually disappeared from his wallet on MetaMask, which is like horrifying. It's like what, how, like MetaMask isn't looking at the Ethereum blockchain to see if I own this NFT. It's querying the centralized server of OpenSea, and they are like the gateway keeper to whether or not you own this NFT. Like, shouldn't it's just an incredibly like ironic conflict of interest of saying you're decentralized, saying you're the next edition of the web, and yet you like in order to scale using cheap web 1.0, web 2.0 tricks in order to like give your users a better interface. I mean, what do you think about this, Luke?
Yeah, I think OpenSea's got to go. Not because and again, that was pretty harsh of me. That was pretty harsh of me. What I meant to say is OpenSea have done a great job, being at the forefront of this frontier, being what needs to be done to get, a user interface and a workable interactive, experience for NFTs and a marketplace and all that stuff. But the way they're handling it, it's not right. Like they're making something like, oh gee, I can't remember the numbers on the fees, but it's a lot. Like it's tens of millions of dollars a day in revenue. The platform's earning, and this is kind of leading on to our next point. We've actually just seen what looks to be an attempt of a vampire attack on OpenSea. And so basically a vampire attack, and we saw something similar, exactly the same thing with Uniswap and Sushi. Actually, very funny, exactly the same thing. Before Uniswap had a token, SushiSwap forked their code and then gave everyone, there was a token for it, and you could get better rewards and vote on whether rewards and fees go from SushiSwap. It's exactly the same thing going on here. So what Looks Rare does, and of course, like I'm not advertising like to buy this or anything. We're just talking about the topic. Looks Rare, they did an airdrop to anyone who had ever interacted on OpenSea based on a volume weighting, and then airdropped them their tokens. But the best part about it is they're allowing people to lock up and stake their tokens and earn fees from the platform. So all that revenue that OpenSea was just taking into the pocket of a few, now people who are actually buying and using this, Looks Rare marketplace platform are actually also incentivized and benefiting from the fee structures. And in my opinion, that's essential. And, the more and more OpenSea drag their feet on stuff like that, the more and more they're going to lose volumes, in my opinion. I mean, I don't think this will be the first NFT marketplace with real teeth to come out and try and take a stab at those fees and volumes, personally.
Yeah, I mean, all I have is like one very important question, Luke, or request actually.
Okay.
Say sushi swap 5 times fast.
Sushi swap, sushi swap, sushi swap, sushi swap, sushi swap. Wait, was that 5? Sushi swap.
That's 4.
Sushi swap, baby. Woo! Don't need to do math to crypto, baby. Up only.
Dunk on them, dude. Dunk on them.
Anyway, that leads on to our next thing, and I've coined this topic, normies hate NFTs. And before you jump on me, we'll kind of talk about why. Now, basically, you guys may have heard that like a lot of big gaming companies are trying to integrate the metaverse and NFTs and all those sort of things into their games and their user base. And in my opinion, all for it. Like that's a good thing. You should be taking initiative to be, innovative and on the frontier of stuff. However, the normies don't seem to take it that way for whatever reason goes. So maybe we can speculate on where this pre-consensus is kind of come from. But a lot of them, I think, so Sega has actually paused their NFT plans following Gamer Backlash. And Square Enix, so I think Ubisoft, was it Ubisoft that is Square Enix? No.
So the 4 companies we identified was Uniswap, Ubisoft and Sega versus the likes of Square Enix and Konami. Now, with regard to like this backlash, right? If you understand this from like someone who buys games, right? When DLC was implemented, NFTs are almost like they will become the successor to DLC and digitally downloaded games, by the way, as well. But DLC, like everyone remembers horse armor for Oblivion. Like Xbox 360 was one of the first editions of DLC in a game, and you could buy like this ridiculous, like pretty but like horse armor for like $6, so 1/10 of the entire game, and like everyone like completely made fun of it. And then you have like the likes of like loot boxes and EA games like just totally like hollowing out like really solid game mechanics for the sake of like shoehorning in like buy to win sort of mechanics of like exploitation of consumers' wallets. And so a lot of gamers have a lot of trauma with regard to this. And so when they hear NFTs and they see all the hype around it, they kind of get like Vietnam like flashbacks to all the hard fought battles they had against these gaming companies and exploiting them for money. And so this is mainly why we're seeing such a vicious backlash, because they're frankly, like, if you don't know why you're using an NFT, you shouldn't use it. But if you do see the reason why the tech is being used and potential is there, then maybe explore it. And it's interesting because Ubisoft initially completely shuttered their approach to NFTs after the massive backlash. And if y'all remember, the the YouTube video where Ubisoft announced Ubisoft Quartz was one of the last YouTube videos that you could actually see the downvotes for. And they were massive. They were absolutely massive. And it might have played a role in why YouTube decided to cut off downvoting on their system, but who knows? I mean, all I got to say is that they now have recommitted to this over time. And Konami as well, as we see to the right, is releasing their own Castlevania-like NFTs. And funny because they've completely abandoned Castlevania as a franchise at the moment, and now are just kind of releasing NFTs off of its like the gaming, this legendary gaming franchise, of which it had its 35th anniversary recently. And if y'all don't play Castlevania, I highly recommend it. Like it's amazing. I played through it this entire season, and it's one of the best gaming franchises of all time. And so it's just an absolute shame to see them disassociate from actually making the fundamental games themselves, and kind of exploiting. Again, this is why the backlash is there, exploiting the franchise and the wonderful memories people have built off of it for cash grabs. And so this is not functional. This is not the actual real way in which NFTs should be integrated. It should be add-ons. They should be functionally integrated in a way that actually it makes the game better. It's not just asking you to give more money for some trinket. So
I definitely
that's
think
the way I look at it.
Yeah, I definitely think you kind of got to give them a little bit of leeway. Like a company like that isn't going to do a full rehaul without probably dipping their toes in, and I feel like this is them dipping their toes in. So
sure, absolutely.
I also find it very interesting. Like, I just wanted to touch on the climate aspect, because I've seen a lot of people say that NFTs are crap. I hate NFTs. They're bad for the environment. And it seems to me that for some reason, a lot of normies have got that idea that NFTs are somehow literally like burning the environment apart. And I thought it was interesting, guys. So maybe we could just ponder that thought for a second. Like, where do they get these preconceptions from? And I think there was definitely a period, even in the last 6 to 12 months, where that environmental angle in the mainstream media against crypto is definitely being used a lot, to the point where you can go on some discussion sites on Normie Land, which I like to call Reddit, not Reddit, sorry, Facebook, and
I agree with you.
And everyone's just talking about burning the environment. You don't care about the environment. You got to stop them. And I've seen numerous companies coming out and saying they're against crypto and Ethereum because it destroys the environment and stuff. And obviously it uses energy.
Firefox, they paused taking in donations from cryptocurrency because there was some vague environmental concern. But again, it's like, I don't want to get into too much about this, but I find it so interesting that people are so idiosyncratically focused on a sphere that consumes less than a percentage, maybe less than 0.1 of a percentage of any amount of electricity in the world, and it's clear that they don't understand why it consumes electricity. Just as we were discussing before about hash rate, in that the way proof of work works is not just through mindlessly throwing electricity at something in order to generate a profit. It's there's actual constraints there. And the way, again, the game theory is set up, it encourages renewable usage, actually. The usage of energy that normally wouldn't be harvested. Everyone is talking about the ridiculousness. It's every NFT costs tens of thousands of dollars of electricity, or there's so much tons of carbon going in every time you do that. It's one, based on flawed measurements of what electricity is being used and what type. And two, it's also not even being you can laugh at the frivolous nature of how NFTs work, but what isn't frivolous is how dynamic this environment is and how quickly it's changing. And
Mm.
and yeah, it's just normie land. It's like someone expressing that they don't know anything. And that's like, it's funny on both ends. It's funny for them, it's funny for me. I mean, I don't know what else to say.
Well, good place to wrap up. But before we do the last little topic, just a quick word from Luke. I thought this was pretty interesting. Back in early December, haven't really spoken to you guys much about market updates or overviews of what's going on, but Coinbase Wallet says that they're looking to partner with Ledger to build support for hardware wallets into their own product. I thought that was pretty cool. Personally, I thought that was pretty cool because, Coinbase, for all that they aren't great at, trading fees, deposit fees, withdrawal fees, all that nonsense, they are a big company in this space and they are, building good products. And I think integrating Ledger into a wallet is huge. And I also think we're going to see this a lot, which is kind of where Zen's a little bit ahead of the game in that whole CDeFi space. You're going to see a lot of centralized exchanges really plugging into this on-chain ecosystem as on-chain becomes more lively. And I think this year's been the year that on-chain has become lively. With DeFi, I mean, every bloody week we've got a new layer one popping up with, hundreds of millions in TVL and stuff like that. So I think this trend's definitely going to become more prevalent. Seeing big, centralized exchanges trying to bridge, no pun intended, but like trying to bridge onto that on-chain world. So yeah, I just thought it was pretty cool. But anyway.
Yeah, CDFI is the future. And that's that.
All right. Well, thank you everyone for watching. It was a long market update, 37 minutes. But hey, it was good chatting to you. Hope you did have a good holidays. Hope everyone's well and they're, pushing through this tough time because it is a tough time regardless of your viewpoints on the world at the moment. I'm not going to be one to make it more divisive. Yeah, divisive because the word divisive. Yeah, because the world doesn't need any more of that shit right now. But just look after each other, look after your family, take care, drink water, vitamin D, vitamin C, Anyway, guys.
Just act in love and then everything else works out.
Yeah. Too easy. All right, well, that's it from me. Peace, fellas. Thank you for tuning in.
Cheers, lads and lassies. Until next time.
Catch you later. Bye.
Bye-bye.